Ed, I'll start with you. We're trying to make sense of what the bond market is telling investors. And yes, there are signs of the economy improving. Retail sales at 5.5%, the unemployment rate dropping over the last couple of months. But there's still no clear evidence that this economy is in an upward trajectory. So I'm wondering whether the argument around inflation running too hot is premature.
I don't think so. I think the bond market's got it right. I think the bond yield actually would be at 2% today if it wasn't for all the intervention that the Fed has been doing for the past year. For the past year, the Fed's bought basically all the bonds and notes that the Treasury has been issuing. So I think that's kept the bond yield down. But nevertheless, it's been trending higher since August. And I mean, you're right about the economy still being frail when you look at the labor market. And that's what the Fed chair is focusing on. Is he believes that the unemployment rate, for all practical purposes, is really more like 10% than 6%. But when you look at real GDP and other macroeconomic data, we've had a V-shaped recovery, and in many of these indicators are almost back to where they were before the pandemic. So they've done a very good job up to here. I think the bond market's concerned about more stimulus, possibly overheating the economy in the second half of the year, especially with the likelihood that there'll be some semblance of normal once the vaccines really do kick in.
Abdur, we heard some of introductory remarks from Powell, from Steve Leisman there. But how do you think Powell handles the questions around inflation in today's hearing? Does he acknowledge it or downplay the risk and say that if it does heat up, the Fed is ready to act?
I think in general, the Fed will be ready to act if it does heat up. Our expectation is that as we're seeing an upward trend in inflation, it's not likely to persist the duration of 2021. We believe that repositioning portfolios into more what we call complementary asset class like infrastructure to help to insulate an investor's portfolio from inflationary pressure, along with natural resources as well, and provide high quality income and growth components in a multi-asset class portfolio. So we still see inflation as being sort of transitory and sort of at some point stabilizing. And actually, if you buffer the portfolio appropriately, clients and investors should be able to weather any type of significant increase in inflation as we move through 2021.
Abdur, why? Why do you think you expect inflation to be transitory?
If we look at some of the supply-demand dynamics, one thing that's driving sort of this upward pressure is we've had a limited supply due to coronavirus sort of stoppage. And as a result of that, the growth expectations of coming in, the demand cycle, will be probably fairly high and outstrip that. But at some point, suppliers will get in line fairly quickly and start to actually produce and actually come in line with the demand. And so it should dampen out slightly as we move through into 2021. A lot of this is a COVID-19 issue. And so as that dampens, we get better inoculation, better vaccinations, better vaccination rates, we should see pressure start to actually come down on inflation as we move through into the later parts of the year.
And Ed, similar question to you. You mentioned the second half of the year and inflation fears. What is your prognostication in terms of whether we'll actually get it?
Well, I think we are going to see inflation finally, it's sustainably for about 6 to 12 months, go over 2%. This has been the Fed's wish since January 2012, when they officially said that they want inflation to be around 2%. Now, in August of last year, they said they'd actually like to overshoot that because they've undershot it for so long. So I think the Fed will tolerate 2.5%, maybe even 3% in the second half of the year, and that'll be the year-over-year comparisons. But beyond that, I kind of agree that productivity really should kick in here to keep a lid on inflation sort of on a longer-term secular basis. But on the near-term basis, I think the bond market's got it right.
Shepard Smith here. Thanks for watching CNBC on YouTube.